This is Eric with Mrkt.com with the long weekend market analysis video as we come to the end of the week here. Today being April 18th, 2019. As we can see, markets just about to close with about, let's call it about 50 seconds or so. Let's take a look here at what the S&P 500 for the week looks like. We are going to be closing almost unchanged. And we take a look here at the Dow for the week. See here, up about 0.57 for the week. And take a look at the Nasdaq. We can see for the week, I believe, was close to unchanged. There's the closing bell. So close to unchanged for the Nasdaq. So in this options expiration week, pretty much we can see the market, as far as the Dow was slightly up, but for the most part, the market was unchanged as far as the Nasdaq and the S&P 500 are concerned. We'll let the numbers settle in and then we'll take a look at the charts for this long Easter weekend holiday. So one of the things we can look towards for a potential level to watch is the all-time weekly closing high for the S&P 500. And the level to watch there is 29.57. Goes back to the highest weekly closing high from September of 2018. So clearly the market needs to take out that level to encourage market participants to anticipate higher prices. So that's one level to watch there. Now the problem I have to say as a side note is we've seen the market come back, and this is definitely a V-type formation. And the problem with V-type formation, where we get a breakout, let's say the market goes on and attempts to break out, the problem is that the market has already seen a major move. And so the problem here for the market is the fact that breaking out right now, coming out of a very steep V-type formation, would suggest a high likelihood of a failed breakout, because we know that V-type bases, and this is of course a V-type base, they tend to be very problematic when they attempt to break out. As in theory, you would conceivably need the market to settle down here, digest this big move here, and then at some point breakout. That would be more stable. Otherwise, this V-type, the current V-type formation, in my opinion, will have problems even with a breakout, just based on the fact that it's really come way off the lows. And of course, we can see that we can draw a uniformity line based on this recent break. And keep in mind, this level happens to be around the RSI 61.8, which means this level is very meaningful. Now keep in mind, for the entire week it was just pretty much unchanged as far as S&P 500 is concerned. So it might be that the market is recognizing this level could be a problem. So again, we have another level to watch. We have a price breakout. We have the RSI on the weekly to watch here. A breakout above this line would be very bullish in the short term, and a breakdown and failure to hold above this level and coiling down might be a sign of a market that is due for a pullback, if not a major high. We shall see. On the daily for the S&P 500, it looks and continues to be constructive and looking good. As we can see here, going back to even as far back as January, all these short-term market pauses led to successful breakouts on the way to the current price levels. So we have good constructive price action. Breakout here would eventually be tested and held. We have another breakout here that was tested and held. And we can see again recently another breakout that has been successful. So really the construction of the recent move on a daily basis looks good. Now what we can also watch here is there's a line we can draw for guidance, and it's the RSI lows line. Just draw it like that. We can see that as long as the market is holding above this line, we should anticipate a market that is gonna favor the odds for higher prices, and a good likelihood, if the line is still holding on the RSI, the blue line, we can also anticipate the possibility that the market would come here to test these highs. In the short term, a break below this line here would be a signal that the market is changing its behavior and could be poised for a pullback. Of course, should we pull back, we want to watch these levels here, the previous daily closing highs, for guidance, because if any of these hold, then that continues to be a constructive market. So net, there's a lot this market can find. Even with a pullback, it could still be very healthy. Keep in mind, as of right now, we are still trading above the 50-day moving average and the 200-day moving average. So just by looking at that, the market continues to be constructive in the short term, day to day. What we can do here is we know that a break below the blue line would signal a change in the current momentum higher. Also, let's watch the RSI value here. Bulls would want to see the market recapture the RSI 69.1 level so as to increase the momentum to the upside. So just watch this. Anything above 69.1 is a market you have to respect, with very strong odds of continuing moving higher. If we take a look at the 2 hourly, we can see here that as long as the market is holding above the RSI 50 on the 2 hourly, even in the short term, the market continues to favor upside price action. Now we can take a look at the RSI, and in my opinion, we can draw a wedge. You got bottom side support, you got top side resistance. So this to me looks like a well-defined wedge, and what's gonna come out of this, either we're gonna get a breakout above this range, which would be bullish, or we end up breaking below the wedge and we start seeing the market drifting lower. Now keep in mind, generally speaking, we know that markets don't drop until the RSI is below 50. So this is just something to consider. Keep in mind, as long as the market is holding above that RSI 50 level, something it has been doing on this chart since about here, the market should continue being favorable to the upside. So watching the wedge for short-term guidance might be good. Otherwise, keep in mind, if the daily for the S&P 500 would go above 69.1, we give the benefit of the doubt to the bulls. Otherwise, as we begin the new week, let's take a look at that weekly chart, which I began with. For guidance, resistance on the line might suggest that this market is due for a pullback. Otherwise, if the market can clear that resistance line, let me just share with you that one more time. On the S&P 500, you can clearly see this is gonna be tested in the new week. So as visual guidance, moving above this level would be bullish in the short term, and we can see that drifting below this and showing resistance would be a sign of a market due for a pullback. So we'll see how the new week is gonna go. So we can actually even see visually that maybe there's a reason why this market, as of right now, seems to have slowed down its pace around here over the last 3 weeks, maybe because of this level here. So above it is bullish. Resistance and movement below this line would suggest a market due for a pullback. Otherwise, do enjoy your long weekend. This is Eric Mrkt. The rest of the video is for paid Mrkt.com subscribers.